Good morning. So nothing's really happening in the markets this morning. Waiting on a couple things to happen, but it's not happened yet. So gonna go hit the gym, gonna go sauna, refresh for the day, then get back and just start cracking on with everything. So gonna be quite a busy day. Got a lot of filming to do for Envision Mastery and just some other things really. So what have we got today? Gonna do a deep ASR on like trading stuff. So it's gonna be a busy day, but I'm gonna take you along with me. Whatever we get up to, gonna show you. Before we go, Jim, we're going to have a coffee. So let's get a coffee and Shilajit. Perfect. So we've got that, and then we're taking this for years, which is Shilajit. Absolute class for energy. We're taking that, and then coffee to finish off. Right, I am currently midway through filming in Envision Mastery, but I thought I'd take a pause in that and just actually talk about a topic which is very key in the space right now, which is prop firms. Most people have a warped perspective, and it's important that I actually give you my 2 cents on this because this is key. Now, a few things to bear in mind. Prop firms is like a house of cards, right? Please bear in mind this space did not exist when I got involved in trading. The focus was grow your own personal account and get involved in investor capital. Those were pretty much the two options. Now you've got prop firms. If used wisely, great vehicle. The problem is most people aren't viewing this widely. Most people are coming into the space, seeing the window of opportunity and thinking, let me put 2 grand into prop firm challenges. Let me try and flip that. Let me try and pass it and then I can get 20 grand potentially. The focus is completely backwards. So it's creating an evolution of traders that are not traders. They're honestly just gamblers. That's the way it is. Most of these prop firm traders do not even have one personal account. Not even one personal account, which is mind-blowing to me. So the focus for you guys should be, yes, of course, feel free to do challenges, all this kind of stuff, but there's a few things to bear in mind with this. Number one, you should have your own personal account, or if not, that should be your primary focus. It shouldn't be, let me put 2 grand and all my savings into prop firm challenges. That is not smart, that is not tactical at all, that is not, it's just shocking. Honestly, please, bear in mind this. That what you should be doing is, yes, divert a percentage of that into prop firm challenges to pass. If you are consistent. If you're not consistent, there's no point. Get consistent first. Build a personal account, even if it's small, even if you have to start with like 500, a grand, 2 grand, 5 grand, start somewhere, start small, because no one creates those rules for you. You create your own rules, it's your own capital. You can manage it how you want to manage it. You don't have to close trades at night because you're forced to. You have to close trades over the weekend if you don't want to. You've got your own rules. And you will learn key lessons on personal accounts that you will not learn in prop firm challenges. I promise you that. There's so many lessons managing your own capital that you will learn and you will never touch in prop firm accounts. So think about that. The second thing is, a lot of these prop firms are like house of cards. The prop firm space, a lot of these prop firms that are coming out today are not going to be here tomorrow. That's honestly the truth. So if you're going to get involved in prop firms, I personally am. It's a great vehicle to accelerate what you're already doing. However, you've got to make sure it's credible. Don't be just going with a new firm just because it's a new firm, just because they're giving great discounts or whatever it may be to FOMO you in. Make sure it's credible and make sure it's backed. I think there's a new evolution of prop firms coming out. It should be broker backed. If they're broker backed, they offer another layer of credibility. They're unlikely to disappear tomorrow just because it's not worked out. If they've been in the game for a long period of time, they've got credibility in the space. So I've partnered with Think Capital. I've been testing out this platform for a while. Had a talk with the people who are actually involved in this project. Great morals, great values. They want to provide education to people, and they're fed up of seeing people spending money on challenges, failing, and it's just going into the prop firm. These are actually providing you education of things to look out for, things to tweak, things to think about. The education is there for you. Secondly, it integrates with TradingView, so it makes it simple and effective for you to just take trades. And thirdly, it's broker backed. Been in the game for 14 years, so it's Think Capital, but originally it's obviously Think Markets with the broker. So I'm personally involved in these now, been doing a challenge, and it's incredible. I love it, cannot fault it at all, and I love the platform. So if you do want to get involved in prop firms, do it with something like that. There'll be a discount code below, by the way. Do it with something like that, which is a lot more credible, it's broker backed. There's a bit more weight to it. It's not just, Alan from Manchester's just, that's a hotel. it's not just Alan from Manchester just started a prop firm because he believes, it's a money grab. There's morals and values behind this, and that's what's key. So, seeing that I'm doing a lot of content for Envision Mastery right now, and I'm really in the depth of this, I want to show you something simple that will drastically improve the course of your trading performance, your strike rate, your win rate, and being on the right side of the market. So let's have a look. So this concept is around strong highs and lows and weak highs and lows. So if we take a look at this schematic to the left, what can we see here? Well, what we have is a situation of a weak high, strong low. A swing high fails to take out the previous swing low, meaning that the high now becomes weak, and therefore the swing low created becomes a strong low. So if we take a look at price action here, what do we have? Well, we can see that we're in a bullish order flow environment. So that simply means a bullish trend. We have higher high, price comes down, forms that higher low, we develop into a new higher high. What do we showcase here? Clear intention. We see that aggression. So read between the lines. Of course, this is a schematic, but you'll see this in the charts all the time. That is that intention. This is what we like to call the elephant stepping into the pool, because if an elephant steps into a pool, you're going to notice it's very obvious. So it's another way of saying the bigger money is stepping in here. So the bigger money steps in, form that higher high. We have that nice corrected pullback, and this is a pullback into either the decisional, the extreme, liquidity, sweep. So we talk about this a lot in Envision, and then we start to get this strong mitigation away. Now, as we're starting to react away from this area with a strong intent, this is what showcases us. Once again, factor in the fact that we also have a daily directional bias for bullish strength. H1 order flow currently is bullish, and then we start to see signs of this previous low being protected. This gives us a situation, a very strong situation, where we have a strong low scenario, because price is telling us that we have protected this low to the left, and we're seeing that intention drive price away. This is powerful. Once you've got everything on your side, the market becomes, I'm not going to say easy, but it becomes a lot more simple. Now, of course, there's a few things you need to bear in mind with this. We can also get reactions which drive price away in the opposite direction, which of course is covered inside Mastery. However, for this example, we can see that intentional move away, and this is where traders get caught on the wrong side of the market. You see, a problem with most traders is that they think in black and white. You see a lot of SMC traders, they look at an OB, a point of interest, and think, I'm going to sell out of that just because it's a bearish OB. But they lack in context on the situation. You can see here, market structure is very much bullish. So as we see that intention away, yes, we might drive into an OB, but what is the purpose of that drive into the OB? Well, simply, a lot of the time, if order flow is bullish in this situation, it's for a reaction. And what does that reaction do? Well, it builds more liquidity above, because as sellers are getting involved in the market, where are their stop losses? A lot of the time, it's either above the intermediate high or even potentially above the swing high. So if that's the case, as they're selling, we're just adding fuel to the fire. So if we react from this area, this becomes a valuable opportunity if you understand where the market is going to get involved in these buys. So these become highly valuable to us. And it's the same thing here. What we often get is that final push up. Notice where price pauses before we get a break of structure. We're going to run over the charts, but I want you to showcase this to yourself as well. Notice prior to a break of structure, at least 50% of the time, where price pauses. And ask yourself, why does price pause in this area? Well, simply, once again, people will see this as the origin of the move. This is where a lot of sellers will get involved in the market. What does that do? Early sellers drives liquidity above, creates liquidity via stop losses. And then as we get that pullback, people are thinking the move's over. The sell move has started. However, it's not the reality of the situation. The reality of the situation is this is adding fuel to the fire. So this final reaction, I personally love these plays. And then we can get involved in the market again, targeting at least this swing high as a minimum. So this is what's known as traps. You want to be careful of this. And this is what we run over in Mastery and Technicals. You want to be on the right side of the market. If you're on the right side of the market, see it in the respect that you're in flow with the stream of the river. It becomes effortless. Don't be fighting against the stream of the river. It's so simple, but you'll be surprised how many people don't understand and apply this concept. The same thing here. Bearish situation, opposite point of view. Weak low, strong high scenario. A swing low fails to take out the previous swing high, meaning that the low now becomes weak, and therefore the swing high created becomes a strong high. So what we're saying here is we have on the reverse, lower low, lower high, lower low. We have that clear intentional push, nice corrective pullback into value. Then we have that strong move away, showcasing the mitigation. And then what does this do? This creates that likely strong high here, protects the high to the left, which means we have now a weak low. If we have a weak low, opportunities from here, here, and here become highly valuable to us. So once again, what does price do prior to the break? Pauses. You have to think of why. Based on what I've described here, ask yourself why. And then we drive through. So these are traps. This is what you want to be careful of. So what we're going to do now is I'm going to show you a brief example on euro dollar and how to spot this in the live markets. So here we have euro dollar, and we're going to go over to the 1 hour chart. Now this is just showcasing the monthly cycle. We can see the monthly high of the month and the likely monthly low of the month. Now I'm just going to hide this for now because we don't need this. It's actually not relevant right now. However, what can we see from this chart? Well, based on what I've just talked about, there's a few examples of this. Hopefully you can spot it. If you can't, we're going to go through it. So let me talk you through it. Coming into the start of the month, which is the 1st of November, we see that false rally, creating that high of the month. So bullish order flow is present here. You can see the market forming higher highs, higher lows, higher highs. Clear intention comes into the market, developing into a new lower low. We see that lower high, which is not confirmed until we get a new lower low, of course, but we start to see the push away. So once we get lower low, we get the push away. Once again, valuable opportunities to sell in here. Where's the pause? Notice before how I said price pauses prior to the break of structure. Look at this. So at this point, if you're looking to sell, let's just change the color of this to make it more obvious. If you're looking to sell here, you've got to think about the psychology of most traders. They're going to be thinking, the move's already gone. I don't really want to be getting involved in any more sells. It looks like the market's gone. We could be looking for buys here. This is where a lot of traders are going to be looking for buys. And the reason being is because they lack context. Yes, they might be scalpers. Yes, they might want to, take advantage of a short-term buy. That's absolutely fine if you know what you're doing. But if you don't know what you're doing, this is where the traps come into play. I'm not going to draw this too accurately, but we can see that you could draw in a point of interest here, and you could be looking for buys, not understanding that you're on the wrong side of the market because order flow has now potentially switched to bearish. So what you're going to see this as the intention is driving away is, yes, we react. What is price doing via the reaction? Why is the reaction happening? It's for the purpose of building liquidity below structure. Because as we pause here, what is price creating? Liquidity below. So the purpose of this is to add fuel to the fire. So if you understand how to enter the market accurately, we can then get involved in these moves, and you can see how much price extends. Even what's considered late in the move is a valuable opportunity to get involved if you understand why. So that's one example. Then we come down here. Once again, order flow continues. We form lower low. Here, we form lower low. Price comes up, nice and corrective, taps into this area of interest to the left, which is perfect, which number one is a great area to sell as well. We can see the lack of intent every time price takes out the previous daily high or that intermediate high. We showcase a lack of intent here with wicks. Once again, same thing here. Prices drive lower and you're thinking the move's already gone. I've missed the section of the move. It's not the case. Where has price paused from? You can see there's actually two opportunities here. So this is something that Envision members understand in great detail. So we can see that pause here. Where does price pause? The origin of the buy move. Why? Because this is where people are taught in SMC. This is one of the reasons anyway, is that they're taught to buy in these areas because we've tapped into an OB or POI. So when we do that, we can take advantage of sells from this area. Where does price tap into? Valuable entry here. And then we come down, and even from a microstructure standpoint, it does the same thing here. We come down, we pause. Where do we pause? Just before we break through. Why? Why are we doing that?
So you can see here, this happens all the time in the markets. This is just 2 examples from this month on only one time frame, but you can see just by understanding what direction the market is operating in, you can put yourself in such a key, valuable directional bias in the market to actually capitalize on this and not be afraid of what the market is going to do. A lot of people out here are just gambling. They don't actually understand what the market is going to do next. But once you understand where the price is likely to move to next based on fundamental practices, you can put yourself in a situation where you don't have to be fearful of what the market's going to do next. You don't have to be fearful of trying to guess the direction of the market. You understand to a degree of certainty, yes, we're in a probabilistic market, but with this, it's very, very accurate, along with other concepts we teach, how to be on the right side of the market. And then if you're on the right side of the market, there's no fear, there's no need to be fearful, because you're confident in yourself, your skill set, the directional bias, and you can just play price with ease. So I urge you to study this. I urge you to have a play around in the charts, experiment for yourself. Actually, just simply go through naked price. You don't even have to have drawings on, just clear the charts and just spot this. Get your eyes used to it, and I promise you, you'll be better off for doing that.
So that is the end of the video. Hopefully you enjoyed this and got a lot of value, especially when it comes to that Envision Mastery little snippet on the basics of highs and lows. Apart from that, definitely check out Think Capital. It's honestly, you need to be focused on the next evolution. If you are going to do prop firms, at least do it properly with the right frame of mind. Don't be just buying into a prop firm because they have good discounts or they have a great offer, or oh, you know what, they're doing it for $50 when it's a 500k challenge. Whatever it may be, if it's a silly offer, you've got to think about the credibility of that company itself. So you want to be getting involved with the proper ones who've had years of experience in the markets, years of experience, and have your best morals at heart. So think wisely, choose wisely, and apart from that, enjoy the rest of your trading day, enjoy the rest of your trading week. Updates on Envision Mastery coming soon. I'm just going to try and get filming wrapped out as much as I can, as quick as possible, but we also can't rush it. So there's a key line in the sand, but properly excited, and more updates will be coming soon. Enjoy the rest of the week.